Hi, this is Dave with Market Trading Concepts, closing out the week for Friday, June the 29th. Happy Canada Day weekend to all of our Canadian friends out there watching this video. And if you're not Canadian, sorry to hear that you're not having a long weekend. Beautiful weather here, and should be a really good weekend. So let's take a look at where the week closed out on the Dow Futures. Here's a daily chart of the Dow Future. So I'm looking at a couple of things here. Just a quick reminder, this video is meant as market commentary and is opinion only for educational purposes. It is not meant to provide advice or meant to give the impression to take any positions whatsoever. So let's just jump right into this video. We're looking at the Dow future on the daily chart, and you can see this red trend line here. We broke it back in and around here. And last week on Friday, this day here, this bar, this is where we closed out the week right at the line in the sand between this 50% retracement at 12,558 and the support that we identified at 12,521. So you can see that since that point in time, it looked like the next day the market was going to sell off, and you can see that the market pulled back a little bit, and we were looking at possibly a test of 12,300, which was a major support level that we had identified going back a number of weeks. And then you can see here it held this level on this day, and it pushed back up, and then on Thursday it sort of sold off fairly rapidly to this level and got accumulated all the way back up to these levels. And then you can see here the market just powered higher on Friday, right back up to about 12,800. The 12,800 level, it went a little bit above that, but you can see that the market closed right at the highs and right at the top of the range, and this is a fairly wide range bar. So we had a discussion at one of the meetups, and I took a quick poll to see what people at the meetup thought the market was going to do. Now, I was not particularly bullish or bearish necessarily at that time, but the question was, do you think the market is going higher or lower? Show of hands. So most of the people thought that the market was going lower. So basically, you can see here what happens when the market, a lot of people thought the market was going lower. That was the result of the poll. And you can see here that the market pulls back and gives most market participants just enough to let them think that the market is going to go lower. And then you can see what happened here. It's just ripped to the high side. People that are taking short positions thinking that the market is rolling over from here, they just get their heads ripped off right there. So this is pretty typical of the market. Not surprised in the least. This happens all the time. Now, where do we think the markets are going to go from here? Well, we had a retest of this major level. So if we maintain strength above 12,800, which is the major resistance at this point in time, then it looks like we may have a chance to retest these highs. So that's kind of what I'm looking at here. I'm looking at the major support of 12,300 and then 12,521, resistance at 12,800, and then I'm looking for possibly a pullback, and then looking for a push up to somewhere around these levels. That's what I'm expecting to have happen. Doesn't mean it will happen. I just want to take a look at these fib levels here. We had drawn some fibs from this high to this low, and you can see that these levels came in right around those levels. And then this last move was from this high to this low. This is these fibs here, this 50% retracement and this 618. And you can see what happened here. We were finding support right at that 50% retracement of this kind of minor move here, and we were finding support around 12,369 before we pushed higher. So that's kind of what I'm looking at. The market is we're stuck in, we've got this huge consolidation range, and now we've got this other kind of consolidation range in this range in here. So realistically, I mean, we're really stuck in this really kind of huge range in here. This area, to me, I'd really like to see a break out of this level, and in order to be able to play the air in this area. At this point in time, this is still resistance, and we really need to get something going in order to get something going out of that specific range in order to really be actionable on a swing trading basis. Now, from a day trading basis, a move like this intraday, you can catch some pretty good intraday trends and just play those intraday trends. But when you're talking about taking positions on a longer term basis, you start seeing a bar like this, a tight bar like that, a big bar like that. I mean, you really haven't even cleared this micro range here, which on a day trading basis is big, but from a swing trading basis, it's just a chop fest. So that's kind of what I have on the Dow futures. Let's move over to the other the sister stock indexes and see if they're kind of collaborating the story. Okay, so let's first take a look at the Dow future from the Darvas squeeze perspective, just so that we can get a point of reference. You can see here we had these Darvas boxes in play, and in this Darvas box here, we have this kind of U or cup pattern, which is really quite interesting because you could get something like this, like a cup with handle kind of deal, and then push higher. Now, cup with handles are usually left for weekly charts, but nonetheless, the pattern formation itself looks really interesting. Now, let's take a look at the S&P. The E-mini S&P, it looks much the same as the Dow. I'm just going to expand out the daily chart. It had fired a Darvas squeeze signal back in and around this area, but the signal itself is kind of run out. It's kind of petered out because so many days have taken place. But if we get follow through above this major resistance level here, which seems to be about 1,356 half. On the S&P future, we could be looking at a move, potentially the width of this box or a portion of the width of that box, and that would bring us right back up to these intermediate highs, going back a little bit. So that looks really interesting. We've got definitely support down in these areas here at the low of this box, and these price swing lows as well. You've got a good congestion area in there, so that looks interesting for a potential move higher. And then if we look at the Nasdaq futures, the Nasdaq futures look a little bit, from a chart pattern perspective, they look a little bit weaker than the S&P and the Dow. That said, you had a signal that kind of fired off back in here. The highs seem to be, the intermediate highs seem to be a little bit further away back in there. So but they're all kind of moving together, and they're all kind of telling the same story. Just looking at the MACD, it's kind of coming up here and testing its zero line. So that'll be interesting to see if it kind of breaks above and we get some movement up and above there. This looks like it could potentially roll to the high side in terms of the trending indicator. So that all looks really interesting. Let's now take a look at the transports to see what they're talking about here. You've got an interesting kind of situation on the weekly chart, where it's really sloppy in and around here on the weekly chart, and you're in this elongated weekly squeeze, and you're holding the zero line here on the MACD. This looks like it wants to roll back to the high side, and the transports are basically a little bit weaker than the Dow, but they kind of look more like the Nasdaq, right? They look a little bit similar in terms of where they're positioned their positioning is on the chart, except that the highs would be, the previous highs back here would be much higher. So they're kind of telling the same story. You know, you had a signal firing here on the Darvish squeeze, and you're testing the zero line here. So that's kind of corroborating what the other indexes, what the other indices are saying. Let's take a look at the VIX now, and you can see the VIX here. This is an interesting development where the VIX fired kind of a Darvish squeeze reversal. I'm just going to expand out the weekly chart here. So you've got, you know, the break of this downtrend line, and then you have this Darvish squeeze reversal signal, and you're holding in around these lows. So this looks interesting for, you know, a potential move higher, which would bode well for the stock indices, to move higher as well. So let me just see. Actually, I just want to review that analysis there on the VIX. In fact, the VIX moving higher would bode not so well for the stock indices. So you've got a little bit of cross current going on between the VIX and what the stock indices look like they're trying to do. So here you had a long signal, which would bode kind of bad for the stock indices. So, and it's coming right back down into support. So it'll be interesting to see which one of these kind of wins out, because the VIX should be moving opposite of the stock index futures. So you've got a little bit of cross current here going on between the VIX and the stock indices. So we'll have to see how that plays out. So that was looking at the weekly VIX chart. But if you look at the daily chart, in fact, it recently fired a Darvish squeeze short signal here, and it has the potential to follow through down into some of these levels down here, and that would kind of bode well for the stock index futures, at least from the daily perspective. So the VIX should be, you know, if the VIX is going down, the stock indices typically will be going higher. So you've got some cross currents on the weekly chart, but the daily chart seems to be kind of coming more in line with what's happening today on but what I mean by today, what's happening recently with the stock index futures. So that makes a little bit more sense, but you've got, you know, on higher time frames you have some cross currents. So we'll just have to keep an eye on that. And I mean, we really seem to be in a short-term decision-making mode in all the markets, because they can, you know, with the volatility in these markets, they can change on a dime. So looking at the markets from one day or 1 week to the other, or even, you know, even from 1 day or 1 to 3 days out, the situation can change drastically. So you know, we're having to be pretty nimble on our trading feet, you know, for lack of a better description. Okay, and let's take a look at the U.S. dollar index. It seems to be driving these markets in terms of, you know, U.S. dollar index goes one way and everything else seems to be correlated and going other ways. So at least that's been our observation. So the U.S. dollar index, we're looking at the daily chart now, and what you can see here is we had a break of this Darvish box here. We are in a kind of elongated squeeze here on the daily chart, and we push back up, and now it looks like we could potentially roll back over in the dollar index. It had a very down day. It was down over, you know, almost 1.5% on Friday. So if we, you know, you've got some mixed signals here. You know, the trend is still higher. The MACD is still above zero. But, you know, if we get some follow through and break below these kind of support levels here and get some follow through, that could bode well for basically everything else higher versus the dollar index lower. So that'll be interesting to see if we get some kind of follow through with that. We've got, you know, a number of support levels in and around here, so it might make for a choppy ride, even if we do eventually break some of those levels. Or, you know, the alternative to that is we could just hold support and push higher. So it's really a difficult time as a swing trader to be making any swing trading decisions. So we're just kind of focusing on 1 to 3 days out personally, and just looking to see, you know, how things might develop because they have been changing relatively quickly. But, you know, if you put a gun to my head, I would say that it looks like the stock indexes are trying to go higher, but they do have some overhead challenges. So I am personally an optimistically cautious bull. That's pretty much where I sit right now. Okay, and now let's just wrap up this video with a quick look at the euro. We've been talking about the euro. Euro moves inverse of the US dollar, so I like to look at it just to get an idea of you know, like if it's telling the same story or if I see something different versus the US dollar, just looking at the chart from a different perspective. So we had this massive short signal that followed through and sold off on the weekly chart, and we've been kind of building some complex bottoming patterns here, some complex support here on the weekly chart. But if we take a look at the daily chart here, you can see on my radar screen here, we're in a squeeze with a potential breakout situation on the daily chart. So let's expand that out and see what that looks like, and see if it will give us a clue as to what's going on. So if you look over here, you had a break of this downtrend line, a break of that downtrend line, which kind of told us that it looks like the euro doesn't really want to go lower. You know, we're coming down. Boom, we broke above this downtrend line, came back, retested it, and we've kind of been going sort of sideways in this range, but we haven't really been going lower beyond, you know, this low or even beyond these intermediate lows. Things got a little bit tenuous in here within the last few days, and then you can see the euro spiked higher on Friday, which would be expected because it moves inverse the US dollar, which spiked lower. So at this point in time, we don't really have anything major, although it does look like we are setting up for a potential Darvish squeeze not a Darvish squeeze reversal, but some kind of a Darvish squeeze setup. So we really need to get outside of this range here of this Darvish box while we're in this squeeze here. A breakout one way or the other will kind of tell us, give us an indication of which way the market really wants to go. Now, if we break to the low side, that really bodes bad for, you know, higher stock prices and higher commodity prices in general. But if we do break to the high side here and we you know, we get a full-blown Darvish squeeze signal here out of this, you know, breaking out of this range, and let's say the Darvish squeeze fires off as the price breaks out, which it would, in fact, then we really will be looking toward higher, you know, stocks, higher stock prices, higher stock indexes, probably higher commodity prices, and a lower US dollar in general. So that's kind of what we're looking at here, but we are in kind of in the dead zone, and we really need some guidance outside of this Darvish box for overall direction. Now, that said, we do have a lot of challenge points with resistance levels overhead in most markets, and especially here in the euro, as you can see these swing high levels, these congestion areas, breakdown points up above from the previous sell-off. So these are all kind of challenge points. So I don't really expect there to be a lot of really smooth sailing. I'm really expecting, even if we do get an indication of which way the markets want to go from a macro perspective, it could be pretty choppy and herky-jerky action. So I'm not really looking for, you know, a smooth sailing ride there on the in the markets. I'm really looking toward a little bit of a rocky road. So that's kind of what I have this week. For what it's worth, I hope it helps. Have a fantastic Canada Day weekend, and we will look forward to seeing you at the next video update. Until then, take care and be well.